Welcome to Subramani. I'm going to talk to you about a topic which is not very commonly spoken about. One is diversification, which everybody talks to you about, even right at the stage of asset allocation of how much should be in equity. That is also diversification, and the how many shares to hold. Now, how many shares to hold is typically what is portfolio diversification, and along with that, another word which is not very commonly used is portfolio sizing. And I've grappled with portfolio sizing for a very long time, not knowing exactly what to do. So the positions built way back in the 1970s or 80s, I've not really done much to change it. For example, I don't think I've ever bought Colgate, at least not to my recent memory. But whatever was there originally, I have sold a bit and I've covered back. But sometimes I've sold and not bothered to cover back over long periods of time. Yes, I have done that. I have never held on to a position and said this is sacrosanct. Now, suppose I have, say, 25,000 shares of a company. I may never have come below 20,000 and I may never have gone above to, say, 30,000. Now this is wrong. What two things have happened? One is these were originally 10 rupee shares which have now become 1 rupee shares, and therefore the number of shares have gone up. Then there were bonus and splits, but I have not resized my portfolio. I have not gone and bought more of the same, or I have not bothered to say, oh, now this value has reached so much, so I should reduce it. I haven't done anything. I am right now I'm not very overweight in, say, BFSI, nor am I overweight in pharma. I have never bothered to look at my portfolio from an industry point of view, from a diversification point of view, from a group point of view. I have a concentrated bet, I would think, on the Murugappa group. I had a lot of exposure of the Tata group once upon a time. Right now it is basically TCS and Titan, which look high in terms of value, but I have some Tata Motors, I have Tata Power, and I have Tata Consumer, Tata Coffee, whatever, I don't even remember. So I have Tata Group also. I have a little bit of Birla Group. So there is no such thing that I have diversified geographically or diversified group wise, diversified industry wise. I have a motley assortment of shares, and I don't think my core position would be more than 15 companies, maximum about 15 companies. Other than that, I could be trading in and trading out. Like I could be trading in and trading out of, say, Indigo. I have not bothered to see whether how much I am represented by the let's say leisure industry. I don't have too much of things in the leisure industry, but I do have Thomas Cook, I have Mahindra Holiday Resorts, I have Indigo, right? So I have these things, but I have not really sat and analyzed how am I represented in various industries. I have IT, right? So but portfolio sizing is something far more difficult than just diversification. You buy a share and then you like it and then you keep on adding. So in some shares, it is always a work in progress. I may never complete my portfolio sizing in, say, TCS. I could be buying at a low and selling at a high. I could be adding. I will always have some core TCS in my portfolio. I will always have some core Coromandel, Cholamandalam, HDFC Limited, HDFC Bank in my portfolio. I don't think I'll ever get to zero in this, or Reliance. I don't think I'll ever get to zero in some of these shares. And I will keep my position sizing by saying, okay, the shares are down, let me buy more. The shares are high, let me sell. So typically in metals, I have a position in Hindalco, and believe it or not, that position is more than 60 years old. So would I sell? Yeah, maybe if there's a metal rally, I would sell, but unless I feel that it's a metal super rally. But whatever it is, having added Hindalco at 150, why would I not sell at 615, right? So position sizing, well, I bought at 150, I bought at 200, I bought at 250, right? I keep adding at various prices. I have original shares bought in 1957, hold your breath, yes, 1957. I've added recently I would say about 2-3 years ago. And this is a time when I would get out. So my position sizing, does it really matter? No, not really. Because even if I have 8,000 shares or 10,000 shares, I would not sell hold your breath, not sell more than 100 or 200 at a time, which means I could sell on the Monday, Tuesday, Wednesday, Thursday, Friday. So I could sell Hindalco at 570, 580, 585, 590, 615. I would have sold only about 1000 shares or 1500 shares, definitely not much more than that. And to me it is like, okay, you take away some of your profits. Like for example, I'm a happy seller of State Bank of India at 545 and a buyer at 450 or 430, right? So I'm a buyer at that price and seller at this price. I play within the range, but I do portfolio sizing, and after some time I would just hold on for a very long period of time. But holding on very long period of time would be a core portfolio. Like if I have 10,000 shares, 8,000 shares could be core portfolio and 2,000 shares could be a trading portfolio. Very rarely have I got out completely from a core portfolio unless there is some very solid reason to get out of it. Like I got out of Hero Honda. Currently now it's called Hero Motors. When Honda got out of it, I said, okay, now let me slowly reduce my position, and I did reduce my position to zero. I did reduce my position to zero in MRF, but I never reduced my position to zero in, say, LMW or Lakshmi Machine Works, as it is called, right? So in these shares, I think my entry point in LMW would be something like 200 or 300 or maybe even lesser, maybe 100. And I've slowly built a position. Now this is a company which just is not very liberal with its bonus and dividends, so the additions have been just by buying. Have I sold it? Yes, of course I have sold it. I sold it and then I saw the price crash, so I added more. So but I don't know whether I'll come down to zero position in LMW. I'll just keep on adding, reducing. So is this the market in which I'm adding? No, I find it very difficult to add in this market. But my position sizing says unless you sell too much, don't bother about buying, or you shift to cash. And there are new companies which keep coming up, right? I mean, if LIC gets listed and it's at an attractive price, I will have to buy something, and for buying LIC I will have to sell something. So switching happens. I do put in fresh money, but not too much, right? So I'm trying to live more and more out of my dividends, but my current income allows me to still invest. So my earned income is still high enough so that I'm still investing and not living off my dividend, and my dividend is obviously getting reinvested. Am I increasing the positions? Sometimes yes, sometimes no, sometimes I'm reducing, but I've always struggled with position sizing. I've had a lot of discussion with a fund manager, and he is the first person who had told me long back, maybe in 2001, 2002, about position sizing. Otherwise I never bothered. I would say, oh, I remember this conversation saying, somebody saying buy Hindalco, and I said I already have. So he looked at me and said, I don't think Mr. Birla will have any problem if you buy another 500 shares. And then it struck me that just because I have some share, it does not mean I should stop. I have 1000 shares of Kajaria Ceramics does not mean I can't add Kajaria Ceramics to it. I have 1000 shares of Indigo does not mean I can't buy more Indigo. I can always sell at a higher price but add at a lower price. But I can keep adding and make sure that I have a significant portion of Indigo rather than just 1000 shares of Indigo, right? So how position sizing somehow is never completed unless it's some something like a metal or commodity, metal or sugar or something like that. Then the position sizing is over when the markets are doing badly and everybody is just writing them off. Then you also exit at a peak saying, enough, I have had enough of sugar, I have had enough of aluminium, I have had enough of steel. Then you dramatically bring down your position sizing. If you have 10,000 shares, you come down to 500 shares or 1000 shares. You leave it at that, or you even come down to zero and you wait for the metal cycle to happen or the sugar cycle to happen. That is different, but I don't think I'm going to change too much in my position in Nestle, Siemens, Cummins, Colgate, HDFC Limited, HDFC Bank, Reliance, Asian Paints or Berger Paints, Cholamandalam, EID Parry, yes, of course, the commodity. Coromandel is a commodity. But Coromandel, I would again vary my position depending on so many things: international crude prices, what's happening in Russia, how well is the subsidy working. So based on all that. But Position sizing means you keep adding it, because on one day you have. So position sizing means you keep adding a share because it's doing well, and you have the guts, and you have you have research to say. So you bought a company at a particular price. You bought BHEL at 22, and it looked better at 25, 27, 35, 40, and at 52 you finish your position sizing, and you said, now I'll just hold on for the price to go up to 100, 200, 500, whatever is your target, right? So BHEL or a Tata Power, I started buying Tata Power at 30, I bought at 30, 40, 50, and from 50 I'm just been waiting. I sold at 260, 250, maybe at 240 also, and then now I'm again waiting. I will if the price goes down, I'll buy. So position sizing means you decide that you want 50,000 shares of Tata Power or 1 lakh shares of Tata Power, and then you keep on adding. Now for you it could mean 500 shares of Tata Power or 1,000 shares of Tata Power, and say, okay, today I have the money to buy 50 shares, tomorrow I'll buy another 50, and as and when I get money, I will do an SIP, I will build a position. So how many shares should you hold? So I have struggled with this, because you can't look at the portfolio of fund managers, because fund managers' portfolio depend on the liquidity. They would be very worried. So a small cap fund would have 35, 40 shares or maybe even 100 shares, and not willing to put more than 2-3% in one share, right? So they would want a more diversified portfolio. Whereas if I were to do a long-term portfolio for a fund, I would more bravely take on Reliance, HDFC kind of shares and hold a huge quantity, because I know I could get good liquidity to sell. But that is the worry of a fund manager. It's not my worry. I don't have to worry that I will not be able to sell too much of LMW or MRF or anything on one particular day. To me, it doesn't matter. For my level of quantity, I don't have to worry about liquidity as much as a fund manager has to, and fund manager will have a run on his money. I will not have a run on my money, right? So I seriously don't know, but I don't think I will have more than 20 shares ever in my core portfolio. My trading portfolio could be bigger, and sometimes my trading portfolio take a long-termish 6-month, 8-month kind of a thing also. What does one do? Seriously, I have not been able to put a philosophy into all this. So position sizing is something which I struggle with, and I think I will continue to struggle with. If you find a path, if you find a way to do it, all the best. Please share it in the comments column. I am still struggling after so many years of investing. Thank you.